That's what a collapsing dragon looks like right there. That big yellow dot is a Z3 breakdown. And so that's 53.50. And then the supported spring crossing recovery is at 51. So that's 250. That's a 6% sell off on a single position. So we got to be able to find the mover. So how do I find the movers, you ask? Here's a note sheet that you can download from Patreon and just start making some notes to yourself. Start with the list on the left. Market feels like it's going down, big gap down, selling off hard. Sort the things on your watch list by percent gained or lost today. Find the S&P. Oh, there's the S&P. Read up. And then start reading left. Win, Alcoa, Simon Property, Devon Energy. This was at about 90 minutes or 2 hours into the day, and they got smashed even further from here. And all the ones that are at the top of the list were further crushed all day. So they didn't lose that painful position at the top of the stack. So the very first one, Win, W-Y-N-N, Frog Champion. This is what the morning move looks like. Is there any pattern that we have that could trade that? Yes, there is. There's one. There's a supported winter crossing. And then as many of those as you, every time it goes from spring to winter, oh, there's one. There's one. There's one. So there's 5 low risk entries that dominate. And you know what worked pretty amazing as a stop? The Bollinger Band mean. That works pretty good. XOP, yeah, we've already seen. Alcoa, for crying out loud. Hybrid Frog, supported fall crossing or winter crossing, another winter crossing, fall and winter crossing, collapsing dragon, then a nice little supported spring exit. And if you took the supported spring crossing, actually there was a chance to make some money in there. But on a day like today, when the ice cracks, find the movers. So this will get you started in how do I find the movers? That's how. That's a way. So how do I manage that? Here's how I manage that. On my screen, I have a number of symbols that I track. The ones that you see, the letters, are always on my screen. I always have SPY right next in the upper left-hand corner, right next to the stack. And then across the top, I have the indexes I care about for the U.S. markets, the S&P, the Dow, the Russell, and the volatility. There's my two symbols for the kata, DIA and EWZ, so I can keep my eye immediately on them front and center. And then it just may be that the Russell or Mexico is cleaner to see. So that little cluster of 4, that may be all I need today. I've got the volatility on the top right so that I can see if there is early indications of a reversal in the volatility regime. Over on the right-hand side are my old reliables in XLB in the metals. Remember those high-tech trading monsters like U.S. Steel and Alcoa and Cliff Natural Resources? Remember those high-flying tech companies, frog champions? So I can see which of those in the metal sector is having the best day. Then I have Brazil versus Mexico in the middle for my non-U.S., non-first world frog champions. My next stack down in the middle, wheat and precious metals for gold, silver proxy, Devon Energy, Simon Property Group for commercial real estate. And then over on the left-hand side, I have room to rotate some other things in that are of interest from my stack as I see the day unfolding. I might be interested in the finance sector because maybe it's doing better or worse than the S&P. And then that might be JP Morgan and Goldman, or it could be FAS, FAZ, or there could be another target company in here like Win or Virgin Galactic or Nikola Motors or whatever seems to be moving. When I find the movers, I can just drag them over in here. And now I have an all-purpose. I only have a span of control of 4 maximum symbols that I can have a position in at one time. But I can watch that array for tactical indications, like I'm watching 16 patients for their vital signs. And then over on the left-hand side, I have the herd. And I don't look beyond those. Everything that I need to be able to reliably find some number of movers to bring them in here to start exploiting, I can see on one screen. One. And then I have a number of old reliables and frog champions that represent a variety of large cap, small cap, conservative, aggressive, tech, non-tech, first world, third world, precious metals, and then a couple small caps like commercial real estate and a domestic energy guy that are just cool, that are kind of immune to some of those larger moves. So that's my decision board right there. That's how I find the mover, and that's how I frame the trades, trade the frames. So where you got to get to in your head is when you look at a chart that looks like XOP right here. When you see that, what should be screaming at you is a lens, a set of goggles that looks like this. I want you to notice what's happening inside each of those big, fat, purple circles. In the first one, at yesterday's close, everything was tightly compressed at 55 and a quarter, including the RL270 and then all of the other regression lines in a super pinch right there. And then a big gap down, this big, and then sell off here on this big red arrow. And then for the next hour, it did nothing but trade in a tight channel along this blue arrow. And then that whole period of time, the RL270 simply comes down quickly in a linear fashion and rejoins everybody inside a super pinch. And would we be surprised if it broke out of that Z3 pinch to the downside with the rest of the world on fire? No, we would not be surprised by that. And then there is 1, 2, 3 legs down with those 3 thick red arrows. And then the only little rebound or pauses to refresh, these 2 little blue arrows, there was not even a serious run to the upside. I'll grant you maybe that little bump right there, maybe you could call that, but if you took that long, then you should be scratching it and getting short once more. And that's what 3 legs down looks like. And the size of that is even bigger than the size of the sell-off from the gap down. So there was a question in the chat room today which asked, is a big gap down part of a harsh winter? The answer is yes. Yes, it is. It's as if there was a big red candle from the overnight trade and price moved. So it's a big red candle down, and now you have a posture. You could have tried a supported spring crossing here. You could have tried that. It would have immediately failed. If you stuck around longer than this because of rules, okay, I accept that. But right here, you've already, when it crosses that blue arrow, you've already got a supported fall crossing. En route to a collapsing dragon. That's not a fall crossing. That's just a failed spring. But at this point, when you add in the daily status that says, hey, that thing was teetering on a knife edge anyway, and there was a big gap down, and it couldn't make a new daily high and it's starting to roll over, don't stick around. Look at the big purple arrow. What is it telling you? It's going down. That's where the power is. So even if you took a fractional loss on that one, then the proper execution of the collapsing dragon, the Z3 pinch breakdown, and even adding other positions if you want, easily pays for that. But then just notice what that RL270 is telling you. Now, this is on a 1-minute chart. So the RL270 on a 1-minute chart is the RL30 on a 10-minute chart, is the RL10 on an hourly chart. That's the fair price on an hourly chart. So it's telling you what price is doing in an orderly fashion on the higher time frames. So when you do your daily frames and you find those different price levels and you bring those into your chart, that's going to help you. Now, just to make us all feel sick, just a quick look at what the daily trades on Simon Property Group looks like. Find the mover in which direction is going to win, for crying out loud. Brazil. So here's the S&P. So what's the market doing? It's making everything fail. So the market had 3 big legs down. So the question is, what should I do on a day like today when all of the supported spring crossings are quickly stalling? Well, go short. This thing moved minus 3%, which is 1.5 ATR in a couple hours in the morning session in 3 large legs down with readily observable patterns that we know. And we should not have a directional bias. We should have a trading plan that executes in both directions based on what price is telling us. that third leg was bigger than the first and second leg. So that tells you what kind of day that was. When the feed forward is reinforcing and getting bigger, a lot of times we see to the upside that first breakout and move out, that brave move, is the biggest leg. And then the second leg is a little less, and the third leg is even smaller if we even get it. That's what it looks like on the upside. But on the downside, because of fear, it's not unusual to see those legs get larger as each little retracement fails. Then more panic comes in and they pound it to try to instigate more panic selling. So that's what the market did today. That's Alcoa. Oh my God. Gracious. And UDOW. So when we look at our list of standard, usual, normals, the frog champions on this next chart, every single one of those things was decisive today compared to the S&P, which was also decisive. Every single one of those was massive. So when we have an abnormal move like today, greater than one ATR percentage in one direction right off the bat in the morning session, we've got to be able to recognize that, particularly when we know that the market is in this critical state going into the day. When those tripwires hit, you got to shift into abnormal conditions, apply standard work for abnormal conditions. It's like when you drive the car in the winter and there's snow and ice on the road, that is an abnormal condition. So what you do is you engage your winter driving protocol. That is normal work, normal standard work, winter driving protocol for abnormal conditions. That means I dress for the weather. I've got emergency kit. I'm going slower. I check for minimum safe stopping distance. I make sure it's a mandatory trip I got to take. I try to find off hours to go. I wait to see what I watch the Weather Channel to see what's going on. I listen to the police scanner. I budget much more time. And I rehearse my kids on how to drive in snow to the point where I take them over to the parking lot and put them behind the wheel. And then I induce skids and slaloming so that they know how to handle a car when it loses traction. So that becomes not, so the first time they do it is not when their life depends on it. So in the Shingo model of management, we have to know the difference between normal conditions and abnormal conditions. And then we have to create standard work for normal conditions and standard work for abnormal conditions. So abnormal conditions is not a time to be rolling your own. But we know what abnormal conditions are, and then we should apply the standard work for abnormal conditions. Doing